Hey, Grow Business Network. Hope you're having an awesome week. We are going to talk about some funding options for your business. If you've thought about getting a loan for your business of some sort, whether to buy a product or a vehicle or anything like that, or just have capital cash on hand so that you can use for payroll, whatever it may be, I thought this would be a good topic for us to cover and discuss because it's important to know what your financials should look like in order to get a business loan. So we're going to talk about that. I'll read the topic to you here in just a second. I also want to remind you real quick about the competition that we have going on right now in the network. Every person who joins because of you will get $250 cash. Well, a gift is what you'll get. And we're looking forward to having a lot of people join this month, and that will run until our next lunch, which comes up in April. So invite as many people as you can to your network, enjoy them, to encourage them to join, and get some extra cash in your pocket. Let's talk about small business financing options. One way to finance your business is to invite people to the Grow Business Network. Now let's jump into today's topic. You can get business financing by taking on debt like small business loans from traditional banks and online alternative lenders, or offering investors equity. The right financing for your business will depend on factors such as why you need the funding, how fast you need it, and your business's qualifications. To help you find a good fit, here's an overview of 6 of the most common funding options for small businesses and where to get them. Number 1, bank loans. These are best for established businesses with collateral and strong credit. Traditional banks are a great starting point and can help you figure out where you stand in terms of qualifying for financing. These types of small business funding offered by banks include term loans, business line of credit, equipment loans, and even business credit cards. Bank loans typically have a low interest rate and competitive terms, but can be hard to qualify for. You'll likely need strong personal credit, established business revenue, and 2 or more years in operation to access bank financing. Even if your business does not have a strong enough track record or enough assets as collateral to qualify for bank loans, talking to someone at a traditional bank can help you figure out what application documents you need and what your best option may be. Almost every team, I think, in the network right now, or a majority of them, have bankers on their team, so talk to them. We have Lake Michigan Credit Union, and then we have another bank on the Wednesday team as well too, with Miranda. And so talk with those bankers, and maybe they can even lead these topics this week to guide us through it. Number 2, SBA loans. These are best for businesses that don't meet traditional bank strict lending criteria. The U.S. Small Business Administration offers lenders, mostly traditional banks, a federal guarantee on your loan. This makes it less risky for banks to lend you the funds you need to be successful. In guaranteeing the loans, the SBA also connects you with favorable rates offered by traditional lenders. There are multiple types of SBA loans available, including an SBA 7A loan, SBA 504 loans, SBA microloans. The most popular of the SBA loan programs is the 7A loans, which can be used in a wide variety of funding purposes and are available in amounts up to $5 million. Although SBA loans can be easier to access compared to bank loans, you'll still need to meet top criteria: a good credit score, they're saying 690 here on FICO and up, strong annual revenue, and at least 2 years in business to qualify. Plus, the application process isn't easy. You may find yourself trapped under a heap of documents while you work through the appropriate forms. Online loans, best for people with shaky personal credit who want fast funding or ease of applying. With traditional banks limiting access to capital, online lenders have seen an increase in popularity, especially among owners struggling with bad credit. 51% of medium to or high-risk credit applicants apply to online lenders, according to a 2020 report from the Federal Reserve. Online lenders also offer fast cash, with several of them able to turn around funding within 24 hours. These lenders offer a variety of small business funding options, including term loans, lines of credit, and invoice funding. Cost of borrowing, however, is generally higher. Some annual percentage rates reach close to 100%. Wowzers. Number 4, small business grants, best for free financing. Oh, we like free. Small business grants offer a way for business owners to get established or grow without having to worry about paying back the funds. typically offered through nonprofits, government agencies, and corporations. Some grants focus on specific types of business owners or particular industries. Small business grants can be a great funding option for startups as well as for businesses that can't qualify for traditional debt financing. The downside to free financing is that everybody wants it. It will take a lot of work to find and apply for grants, but time spent searching for free money opportunities could pay off in the long run. Number 5, credit union financing, best for members who like a personal touch. Like banks, credit unions offer favorable rates and loans backed by the SBA. But unlike banks, credit unions have increased their small business funding. Between 2004 and 2020, the number of credit unions offering small business financing doubled, according to the Consumer Financial Protection Bureau. In addition to SBA loans, credit unions can offer a range of funding options, including lines of credit, traditional term loans, and business credit cards. You'll likely have to be a member to qualify for financing, but the co-op nature of credit unions often ties them to the community. So you may also reap the benefits of more personal relationships and name recognition. The last one here, crowdfunding. These are best for businesses with products that can capture the public's interest. Crowdfunding sites such as Kickstarter rely on investors to help get an idea or business off the ground, often rewarding them with perks or equity in exchange for cash. Although the popularity of these services has increased in recent years, there are several caveats. For one, your product or company has to be intriguing enough to catch the eye of multiple investors. In the case of equity crowdfunding, where investors gain a stake in the company, there are strict security laws and rules to follow for investors and entrepreneurs alike. Crowdfunding can be a worthwhile option for businesses just starting out, but it's not a great solution for long-term financing. There you go. There's 6 options for financing your business in 2022. If you think of some more, please add them, bring them to your meetings. And if you are a banker in one of our network groups, hopefully you can help possibly even run these topics this week, but make sure you're there to help answer questions, as hopefully your bank or credit union provides business loans to us business owners. Have a great week. Don't forget to invite somebody to your meeting this week. I'm John C. Have a wonderful week.